Tuesday, June 18th, 2019, Maneco 64, home of alternative economics and contrarian views. So the FOMC meeting starts today. That's the Federal Open Market Committee of the Federal Reserve. They will meet today and tomorrow and decide on rates tomorrow at 2 p.m. New York time. There will also be a press conference tomorrow. And I think nowadays there's a press conference at every meeting, but tomorrow there will also be a summary of economic projections. Many of you, of course, already know that I don't think we need a central bank, but be as it may, the markets are going to be watching this. And I think this is one of the most crucial meetings for the Federal Reserve in recent times. And you might say, oh, every meeting's like that. But why am I saying that? Well, because the bond markets, for example, are giving really bad signals about the economy. The curve is heavily inverted. The 10-year yield, for example, right now is at 207. It's down another 1.5 or 1.3 basis points. The 1 month T-bill is at 223. That has come off as well. The 3 month has come off from around 2.5, is at 223. So the short end, the market is saying we need a rate cut. But at the same time, the Fed has announced that it will keep unwinding its balance sheet, which is the equivalent of a rate hike. Selling, letting its balance sheet run off and not buying back maturing securities is just like tightening. And they've promised to keep doing this until September. So they're starting to look more and more not credible, I would say, even though they have not been credible with me as central banks for many, many years. Even before the crisis, they had no credibility with me as it's a centralized institution, as the name says it, and they try to control interest rates in the market of billions of people, a bit like the Soviet Union, right? So I think today, even if they don't cut rates, and I don't think they will, because how can you cut rates today while you're still tightening through the QT, right? And that's the problem they have. And the markets are looking for a cut. But unless they announce something about the QT, and I think that could be their problem, they could lose face and credibility. I personally think if they stick to their guns on the QT side, on the balance sheet side, they'd have to wait until the September meeting, which is September 17th and 18th. And it's a meeting where they will also be talking about economic projections, the summary. The bond market, is pointing to problem ahead in the economy. Of course, they're going to be using the trade talks, the trade disputes with China, Mexico, and other countries as an excuse, as to why they will change their minds. But I don't buy into that. I think the Fed has created this problem themselves with their extremist or unconventional monetary policy for the last, actually we have to say for the last 32 years since Greenspan took over the Fed. I think even though I don't agree with a lot of things Paul Volcker says, he was the last proper, if you can call it that, proper central banker, in my opinion. So, the meeting starts today and the announcement will be tomorrow at 2 p.m. and then they'll have the press conference. So I think there's a lot of opportunity for Jay Powell to slip up, and cause problems for the markets and for investors. They might. So I think the Fed is really cornered. And it will be very interesting to see what happens. I mean, when you look at the stock market, we are still very elevated levels near all-time highs, and yet we're talking about the Fed having to cut rates and the market wanting more cuts. So it's quite a dangerous, how can I say, situation for the Fed. So what about the other headlines this morning that I think are interesting? Well, the FT, excuse me, is reporting this morning here. It says pound slides as no deal Brexit odds rise under Boris. That was yesterday. We continued to slide in the pound, and I made a video late yesterday about the pound. And yes, there's a. I've been saying even before the referendum in June, in all my videos, I kept saying yes, if we do leave the EU. And even after the vote, I said they're going to keep using Brexit as a scapegoat for the falling pound. And I said, don't be fooled by that. Don't be fooled by that, because the pound actually topped in 2007 at $2.11, believe it or not. And it dropped during the financial crisis to 135. It did pick back up to around 172 back in 2014, and it started sliding again even before David Cameron announced the referendum. Since we've had Brexit, just before the vote came out, the vote result of the referendum in June 2016, the pound was trading at around 150. So most of the loss has been from 2007 and 8. And even if we didn't have Brexit or this referendum, I think the pound would still be going down. And why do I say that? Well, because as I said, as I've said many times, well, not only this country, but especially this country, we are a massive debtor nation. As a government, as the public, as corporations, and the only way to carry that massive debt is to debase the currency. We don't have a reserve currency like the U.S. So, and there's not going to be as much demand for it. Yes, Brexit helps maybe accelerate the process, but it's not because of that. Another interesting headline, Trump orders 1,000 troops to Middle East amid Iran tensions. Pentagon cites air, naval, and ground-based threats in additional deployment. I mean, it seems to me that it's the U.S. that's, posing a threat to the Middle East. I'm sure if Russia was sending troops, naval vessels, and much more to Mexico, the Americans wouldn't be very happy. Let's quickly look at what the markets are doing this morning. This will be a little shorter video. It's 7:22 a.m. So yeah, the European stock markets are not open yet. But I saw Deutsche Bank closed around 6.10, I think, €6.10 yesterday. When I did my video about Deutsche Bank, it was trading at 6.22. It will be interesting to see what it does later on. So right now, spot gold is actually rising. It's at 1346.30, up 685 or 0.5%. We're still, we're near the key level around 16. We're near the key level of 1348, which was the previous high this year. But as we know, last week on Friday, we got to 1358. So we're still far away from that, a new high for the year. But I think the market is quite moving quite a bit here. So I wouldn't put it out of the realms of possibility that we could be making new highs today or tomorrow. We'll have to see. Silver is up 6.5 cents, also about 0.5% at 14.90. Range has been 14.80 to 14.94. The Dow is down only 4 points, so very quiet. The stock markets, S&P and NASDAQ are virtually unchanged. Currencies are fairly quiet as well. The pound did drop 0.5% yesterday. Right now it's only down about 4 pips at 125.30. The euro is up 0.1%, 112.34 against the dollar. And the dollar is down 0.25% against the yen at 108.28. Dollar yuan virtually unchanged, 693.50. WTI crude trading around 52. So these tensions around the Persian Gulf or the Gulf of Oman, which is south of that, doesn't seem to be really getting the price of oil, much of a lift here. Remember when I think that incident with the tankers last week, oil spiked to 53.50, I think, or 53.30. So we're down $1.50 since then. So even the headlines about Trump sending troops to the Middle East hasn't helped. I highly recommend people watch Ron Paul's Liberty Report on YouTube. I think Ron Paul is a voice in the wilderness, but he's a voice of sanity. He tells it like it is, what he thinks about what's going on geopolitically and with U.S. foreign policy. And I totally agree with Ron Paul. Something is not right because I was reading an article earlier from the Economic Times. It's an Indian publication. They're talking about how gold and bond markets hint all may not be well for stocks, even though the VIX is at below the 10-year average, and stocks are near all-time high. Bonds and gold are saying that people are concerned. So there's a huge chasm between where the yield curve is and where the stock market is. And I think the Fed and Mr. Powell need to watch out. So there's a huge potential for a mistake tomorrow, not in terms of cutting rates or not cutting rates, but in what he says and their projections and the answers he gives to questions from the mainstream press at the press conference, even though I wouldn't hold my breath for any of them to ask really difficult questions, but who knows? So if you enjoyed this video, make sure you hit the like button. Make sure also you share this video far and wide if you think others would enjoy this kind of content. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.